All right, let's talk about something that hits every single one of us right in the wallet, our taxes. It's the system that funds our entire society, but a lot of experts are sounding the alarm. They say it's too complex, it's unfair, and maybe it's just broken. So the big question is it finally time for a change?
Here's what we're going to tackle. First, we'll dive into what's known as Canada's 50% problem. Then we'll see how two families with the exact same income can end up with totally different tax bills. After that, we'll uncover the real tax burden most of us are carrying. We'll explore three very different ideas for reform, and we'll wrap up with a practical look at how you can actually navigate the system as it is right now.
Okay, so the first major issue that experts keep pointing to really boils down to a single number. Our top income tax rates are so high that they create this 50% problem. And get this, it's a dilemma we've been stuck wrestling with for decades.
In provinces like Ontario and British Columbia, the top combined tax rate is hovering around 54%, and that's the marginal rate. So think about what that means. For every extra dollar a high earner makes, the government actually takes more than half of it, more than you get to keep.
It really makes you wonder, right? Is our tax system just stuck in the past? And here's the real kicker. You hit these incredibly high tax brackets at much, much lower income levels than you would in the United States. It creates this situation where you might think twice about pushing for that raise or taking on more work.
And this is not some new complaint. A Royal Commission on Taxation gave this exact same warning way back in 1966. Yeah, 1966. The fact that we are still talking about a 50+% tax rate today really tells you just how long this problem has been on the back burner.
But listen, high tax rates are only one piece of the puzzle. There's another flaw that experts point to, and this one feels a lot more personal. It's about the strange and frankly unfair way the system treats families.
You see, our whole system is built on something called individual taxation. It's like the government sees you and your spouse as two completely separate financial islands. But in the real world, you're a team, right? You operate as one economic unit, sharing expenses, sharing goals, sharing everything.
Check this out. Imagine two families. Both have a household income of exactly $100,000. But in Family A, one person earns that entire amount. In Family B, two people each earn $50,000. And guess what? Family A, the single-earner household, gets hit with a way bigger tax bill. Why? Because that one big salary gets pushed up into higher and higher tax brackets. The two smaller salaries, they both stay in lower brackets. It's the same amount of money coming in the door, but a completely different result at tax time.
And here's where it gets really inconsistent. The government does see you as a family when it's giving out money, like with the Canada Child Benefit. That's all based on your total household income. But when it comes time to collect taxes, poof, you're just two separate individuals again. You can see why a lot of people say that just doesn't add up.
But wait, the story doesn't stop with income tax. Not even close. If you really want to understand what's going on, you have to look at the true tax burden. And that includes a whole lot more than what you see on your pay stub.
Now, to be fair, there's a reason our taxes are high. As accountant Natalia Volkova points out, it's really a social choice we've made. All this money funds our healthcare, our schools, our social safety net. We get more from the state than a lot of other countries, and, well, it stands to reason we have to pay more for it.
And who's carrying most of that weight? Well, it's us, everyday Canadians. For 2024, personal income taxes are set to bring in almost half of all federal revenue. That's more than double what corporations contribute. The whole system is basically running on the paychecks of working people. On top of that income tax, you've got to start piling everything else on. They're your mandatory CPP and EI payments. That's over 7% gone right off the top. Some provinces tack on health premiums. And then every time you go to a store, you're paying HST or GST on almost everything you buy. And remember, you're paying that sales tax with money that you've already paid income tax on. It's a tax on top of a tax.
So when you actually add it all together, your income tax, payroll deductions, sales tax, the real total tax burden for a lot of working Canadians can get dangerously close to 55 or even 60%. That's a staggering number. and it's so much higher than the income tax rates we usually hear about.
So with all these challenges, it's no surprise that just about every expert is calling for some kind of reform. But what should that actually look like? Well, there are at least 3 very different and competing ideas for the best path forward. Vision number 1, championed by people like Alexander Golayev, is all about 2 things: growth and simplification. The thinking is, our tax code is a 3,000-page monster. Let's simplify it. Let's create tax incentives and lower taxes on investment to attract entrepreneurs and talent. The goal here isn't just to cut taxes. It's to grow the entire economic pie, which in theory could mean even more total revenue for the government.
Okay, vision number 2, from experts like Natalia Volkova, is all about rebalancing the burden. This perspective argues that the system is fundamentally unfair because it taxes the money you earn from your job, your labor, way more heavily than it taxes wealth you get from investments or flipping real estate. So the solution here is to shift things. Tax speculative gains higher and fix that imbalance. This is really all about making the system feel more equitable.
And then we have vision number 3. This one is pure pragmatism. Experts like Ludmila Sosnovsky basically argue that, look, deep, meaningful reform is a political issue, and it's probably not going to happen without a major change in government. So for now, the responsibility falls back on us, on individuals, to get smart and learn how to strategically navigate the complicated system we have today.
And that leads us perfectly into our final section. What does strategically navigating the system actually look like in the real world? Let's break down one very concrete example of how somebody might do just that.
So following that advice, this strategy is all about finding and using what some call the gray zones in tax law. Now, these aren't illegal loopholes. They are just really complex areas of the tax code that, if you understand them correctly, you can use them to your advantage completely legally.
Let's use an Airbnb cottage as an example. Step 1, you declare the property is available for commercial use 50% of the time. Step 2, you register for an HST number and you collect HST on all your rentals. Okay, now here's the clever part. Step 3, you can now claim back 50% of the HST you paid on all expenses for that cottage. A new roof, a new dock, new furniture, you name it. These are called input tax credits. The catch, step 4, is you have to keep perfect records to prove everything. It's a complex strategy for sure, but it's a way to use the tax system itself to help pay for the property's upkeep. So we're left at a real crossroads. We have a tax system with punishingly high rates, rules that treat families in a way that just feels inconsistent, and a debate that has been going around in circles for half a century. The final question then isn't just about spreadsheets and percentages. It's bigger than that. It's about what kind of society we want to be. How should we, together, decide to balance the burden of paying for it all?